Welcome to Smart Stock Watch. Today is May 8th, 2025, and we're diving into Paycom's latest earnings report for the first quarter of 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Paycom has been a fascinating company to follow, especially with its strong focus on automation and operational efficiency.
Absolutely. Let's get into the details of their recent performance. Revenue and profitability overview. Let's start with the top line. Paycom reported a revenue of $531 million for Q1 2025, which is a 6% increase year over year. John, what are your thoughts on this growth?
Paycom's revenue growth is quite solid, especially in a competitive market. The 6% increase is driven by their strong sales execution and the growing demand for their cloud-based human capital management software. Their focus on automation and client ROI is clearly paying off.
And what about their profitability?
Paycom's adjusted earnings per share came in at $2.80, significantly beating the analyst forecast of $2.60. Their adjusted EBITDA was $253 million, representing 48% of total revenues, which highlights their operational efficiency and strong margin management.
Operational efficiencies and future outlook. Paycom's CEO, Chad Richison, mentioned that their strong results were led by automation and operational efficiencies. How does this reflect in their future outlook?
Indeed, Chad Richison emphasized their differentiated approach to automation. For 2025, Paycom has raised its revenue guidance to a range of $2.23 billion to $2.038 billion, with recurring revenue expected to grow by 9% year over year. They also project an adjusted EBITDA margin of approximately 42%, which is quite robust.
That's impressive. It seems like Paycom is well positioned for continued growth.
Absolutely. Their strategic investments in technology and client services are setting them up for sustained success.
Financial health and shareholder returns. Let's talk about Paycom's financial health. They reported cash and cash equivalents of $520.8 million with no debt. What does this mean for the company?
Paycom's strong cash position and zero debt provide them with significant financial flexibility. This allows them to invest in growth opportunities, pay dividends, and repurchase shares, which they did by buying back nearly 25,000 shares this quarter.
And they paid $21 million in dividends. How does this impact shareholder value?
Paying dividends and repurchasing shares are both positive signals to the market, indicating confidence in their financial stability and commitment to returning value to shareholders.
Key takeaways. In summary, Paycom has delivered a strong performance in Q1 2025 with impressive revenue growth and profitability. Their strategic focus on automation and operational efficiency is clearly paying off. John, any final thoughts?
Paycom's results are a testament to their strong business model and execution. With a solid financial position and positive outlook, they are well positioned for future growth.
Thank you, John, for your insights, and thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Paycom's performance in the comments below.